Bullish engulfing pattern. Bullish engulfing pattern. A bullish engulfing pattern typically appears during a downtrend and can signal a potential reversal in momentum from bearish to bullish. It consists of two candles. The first candle is a bearish red candle, showing that sellers were in control. The second candle is a bullish green candle that completely engulfs the body of the previous red candle. This means the green candle's open is lower and its close is higher than the red candle's open and close. This pattern suggests that buyers have momentarily taken control, overpowering the previous selling pressure. The larger the size of the engulfing candle, the stronger the buying conviction, and the higher the likelihood of a bullish reversal. Here's an example of a bullish engulfing pattern in action. Notice how the price is moving down, with sellers in control. Then a small red candle forms, indicating continued selling pressure. But next, we see a strong green candle that completely engulfs the previous red candle's body. This signals a shift in momentum. Buyers have stepped in with strength, overtaking the sellers. The larger the green candle, the greater the conviction behind the move. As we can see, this bullish engulfing pattern is followed by a strong upward move, confirming the potential reversal. Traders often use this pattern as a cue to consider entering long positions. Let's see another example. We see a powerful bullish engulfing pattern forming after a strong downtrend. The market has been consistently pushing lower, forming a series of red candles. Then a large green candle appears, engulfing not just one, but multiple previous red candles. This indicates a sudden and strong shift in momentum, where buyers have stepped in forcefully. While the engulfing candle can consume more than one candle, to qualify as a bullish engulfing pattern, it must completely cover at least one previous red candle, which it clearly does here. What follows is a sharp upward move, confirming the strength behind the reversal. Example of a bullish engulfing pattern in an uptrend. The price is already in an uptrend, making higher highs and higher lows. It then retraces back to a support level, a normal pullback within the trend. At that support level, we see a bullish engulfing pattern form, a large green candle that engulfs the previous red candle. This pattern suggests that buyers have defended the support zone and are likely to push the price higher. In such scenarios, a bullish engulfing pattern doesn't signal reversal, but instead confirms trend continuation. Traders often use this as a signal to enter or add to long positions, anticipating the uptrend to resume. Example of a bullish engulfing pattern in a downtrend. The price is in a downtrend, consistently making lower highs and lower lows. Eventually, it reaches a support level, a potential area where buyers could step in. At this level, a bullish engulfing pattern forms. A large green candle completely engulfs the body of the previous red candle. This shift signals a strong rejection of lower prices and a possible change in market sentiment. Traders view this as a potential trend reversal signal, where the market might start moving from bearish to bullish. It's often used as a cue to look for long opportunities, especially when supported by other confirmations like volume or price structure. Important points. The bullish engulfing candlestick is not just about the pattern itself. It's about the context in which it appears. Avoid trading solely based on a bullish engulfing candle. For higher probability setups, combine candlestick patterns with other tools such as trend lines, moving averages, or support and resistance levels.